The Stop ATR is an indicator that assists us in our risk management, making it possible to define the best stop points for any given crypto asset. This indicator has two main lines and is formed by moving averages. It takes into consideration the fluctuations in price of a crypto asset. Its analysis is based on red lines, which helps identify zones to place stop sell orders, and green lines, which helps us identify zones to place stop buy orders. Without further ado, let's go ahead and place our Stop ATR into our chart. To do this, we're going to go up to the top here, click on Indicators, Add Indicator, and we'll go ahead and search for Stop ATR. And as you can see here, it's also been recently searched for. Now we can also go ahead and search directly on our chart like this. Go ahead and click Enter or double click on it here, like so. And voila, it's now been plotted onto our chart. It's important to keep in mind that good risk management is fundamental, especially in the cryptocurrency market, given that the volatility in this market is much higher than using traditional asset classes within the stock market. Using tools, resources, and indicators that assist us in risk management strategies, like the Stop ATR, are essential in creating consistent performance when trading. Both the red and green lines of our Stop ATR are calculated based on the fluctuations of the price, giving this indicator an edge when it comes to its precision. We can also define different time intervals for our chart and have our indicator equally configured. This makes it possible for us to carry out different types of trading techniques, from scalping to swing trading. Alright, just to recap, the green lines serve as a stop signal for a long position, and the red lines serve as a stop signal for a sell position. These lines can also be used by more experienced traders as a trailing stop. You should also pay attention to the indicator's signal changes because it can mean that we are experiencing a trend reversal. For example, we can find the indicator's signal changes in various spots on the chart, like here for example, as well as right here. Alright, let's go ahead and expand the chart a bit, like so, and go ahead and place a buy at market order. So we can see that the direction of the price movement is going upwards like this, and the Stop ATR has consequently plotted its lines below the candles. So as a result, we're going to go ahead and place our stop slightly above our indicator, like this. In addition, we can customize the indicator to our liking. All we need to do is click directly on the indicator like this, and voila, we have our properties. So here under the Parameters tab, we can make adjustments to how the Stop ATR is calculated. We can modify the calculation of the standard deviation, as well as the time interval and average type, which includes weighted and exponential. Alright, so for demonstrative purposes, let's go ahead and change our standard deviation to 1. Perfect. And now we would go ahead and click Apply and OK. As you can see, the indicator's lines have become a bit more sensitive after this change. Alright, we can also go ahead and change the standard deviation to 3 to see the difference. Apply, click OK. And as we can see, the Stop ATR lines now are plotted with a wider interval. It's up to each trader to analyze which standard deviation best fits with their strategy and style, considering the asset they're trading and also the time interval selected for their chart. Under the Appearance tab, we can also change the style of both signal lines as well as the color and thickness. Then we go ahead and click Apply and OK in order to modify our changes. It's important to note that this indicator allows us to perform our trades with the best stops, regardless of the time interval and trading style we're using, because its calculation is always adjusted to the time interval to that plotted on our chart. In addition, it's important to pay attention to the signal crossovers, which can tell us if we're facing a trend reversal, and can serve as a good indication whether or not we should either close out our position or enter into the market in favor of a market uptrend.